Is it? IAS 13 talks about provisions, contingent assets and contingent liabilities, and IAS 10 talks about events. Is it right? Events before and events after. Is it right? It talks about what are the adjusting events. Is it right? What are the adjusting events and what are the non-adjusting events? Is it right? Which events should be adjusted, which events should not be adjusted? Okay, and that's the basic thing which we are going to do. Is it right? Provisions, basically provisions. In when we are talking about the provisions we are talking to taking the provisions in terms of what, in terms of receivables. Is it right? In terms of receivables, in terms of the bad debts. Is right? Receivables is nothing but in terms of what, in terms of bad debts. Is that contingent assets, contingent liabilities? Is that contingent liabilities is nothing but legal claims? Is it right? We are talking in terms of warranties. Is it contingent? Maybe or may not be. Is it right? Maybe or may not be. Theoretical questions will be more on this. Okay. What I have reviewed the question papers, I came to know that there is a lot of theory on this. Is it? Very few questions. Is it? We do calculations also. Okay. Explain why an accounting standard for provisions are necessary. Why, what we are doing. What are the legal obligations and what are the constructive obligations. Legal obligation means you have to, by law of land, you have to pay. Okay. Obligation means the commitment which you have to give. Is it right? Why we are making a provision? Is it right? Why what are the circumstances provision can be made, what are the circumstances provision are not made. Okay. Basically they are talking about how the provisions are accounted and how the provisions are measured. Okay. What is the contingent liability, contingent assets? Is it right? What is the treatment we are going to give for this? Is it? This is little bit important. Okay. This is not important. Why I say important? This is new, and that is the reason they will check on this. Okay. And what are the NRS contracts? Is it right? What are the environmental provisions? Nowadays, this is one of the hot topic. Okay. Yeah, very very hot topic in terms of we cannot mess it up. Very simple. Any company cannot mess it up with environment. Okay. Whatever the environment rules and regulations are there, we have to follow those rules and regulations very very precisely. Okay. Very very precisely as such. Fine. 1 minute. Is it environmental concern, and what are the provisions for what are the repairs, refurbishment? Is that we will create. See, why we do this is only, see, if you ask me why, what is the purpose of doing this, only to reduce the, show the profits at the lesser levels, pay less taxes. Okay, the bottom line is that. And what this is, okay, and this is what are the IAS 10. Okay, events after the reporting period. Is it 31st December? Is it right? After signing, after ending. Is it right? After signing, because usually what will happen when we are taking into consideration the factors related to adjustments is that financial reports can be held for almost 4 years, 4 to 7 years. Is it right? Audited reports. There are some terms and conditions when the events can be adjusted and when the events cannot be adjusted. Is it right? The difference between adjusting events and non-adjusting events. Is it right? And what is the correct accounting treatment for events occurring after the year end? Is it right? After the year, see, there will be some misses. Is that there will be something missing? There will be something missing. and after that you will realize it. Once you are realizing it, how you have to treat it. Is it right? These are all the things which we are going to work it out. Fine. The same thing has been put it in the graphical format. Is it right? We are talking about two things. One is we are talking in terms of IAS 37. One we are talking in terms of IAS 10. Is it right? IAS 10, adjusting events, non-adjusting events. Is it right? IAS 37, what we are talking about? We are talking about provisions. Is it? We are talking about the provisions. We are talking about the contingency. Again, contingency assets are there, contingency liabilities are there. Fine. When you are talking about the provisions in terms of recognition, what are the obligations, how we are measuring, and most important is specific cases. Is it right? Specific cases as such. Is it? That's very simple. Is it? Now, I told you in the beginning, just now, few minutes back, why we make provisions. We are making provisions only to reduce the profits. Fine. Is it? We have the concept of prudence. I don't know. Is it? You have the concepts of prudence. You have any idea? Yes or no? Conservatism. Yes or no? Tell me fast. Don't waste time. Any idea about this? What is the concept of prudence? Concept of conservatism? Allah Kareem. Bismillah Rahman Rahim. What is that? No problem. I'm here. Is it right? I'm here. Don't worry. I'm here to explain you. Okay. What happens? See that. What is a prudence? See, as an accountant, as a finance manager. Fine. This is the entire story of this lecture. Okay. Entire summary of this lecture. Okay. What it says that you will always be cautious. Is it right? You will always be cautious. You will never be aggressive. Is it right? Accounting is like that because what you are doing, you are estimating profits for 2022. Is it right? You are in the month of November. Is it right? You are in the number of November. You will do. You will use IAS 37 left, right, and center. Wherever there is a provision, you just put the provision. It is an estimated amount. As it right? What you are doing, we are working very cautiously. Is that assume? Is that what happens? You will estimate less profits. Is it right? You will estimate or project less profits. Is it right? But actual profits will be more. Nobody will question you. Understand what? Nobody will question you that why you have done like this. Why you have. Is that you say the estimated profits are only 25 million. Okay? We will think big. Nothing will happen. Is that estimated profits are 25 million. Now actual profits will be how much? Actual profits will be 35 million. People are happy. Nobody will ask. Fine. Is it right? Nobody will ask. But the problem comes when estimated profits are 25 million and actual profits are 12 million. Is it right? People will question you what wrong you have done. Is it right? What the people will do? People will act cautiously. Is it right? People will act what? People will act cautiously. When you go cautiously, is it right? Estimate less. Is it right? Estimate less. But actual should be more. Using until the issue of IAS 37, there are no accounting standard covering the general topic of provisions. As simple as that. This is applied to every other case. Forget about the provisions also. This led to various problems. What are the provisions are often recognized as a result of an intention to make expenditure rather than obligation. Is it right? Intention to make expenditure. What you are doing? We say that it is a receivables. Is it right? Receivables are how much? Receivables are 25,000. We make, nobody will question you, okay? Nobody will question you. You will say that yes, there is a provision for bad and doubtful debt. There will be repercussions. There will be some implications. There is no doubt on that. Is it right? They say that bad and doubtful debts. Is it right? They say that bad and doubtful debts. They say that it is at the rate of 10%. Fine. They will question you why you have sold the assets to those people who you are not expecting. How you will sell this? Fine. But what happens? You have that liberty with you. Is it right? You will make it a point that yes, it is going to be how much? 2,500. Fine. 22,500. Problem is not here. The issue is not here. The issue is where? The issue is here. 10% is a higher provision. Okay. You are selling for 100 reals and you are going to expect 90 reals. Why? You will not. Margin is only 5 reals, 5%. Loss is how much? 10%. Just imagine. It will not work. Got my point? There are negative aspects also. But when you are talking about the things, what is the intention? Intention is to make the expenditure. This is all about what? That's what they say. Is it right? This is all about intention. Why intention? Nobody will know. Fine. Several items could be aggregated into one large portion of the provision. This is called as big bath. Okay. This is called as a big bath. This is the accounting term. This is the accounting term. Is it big bath? Big bath is nothing but very simple. Very simple. If I don't tell this, you will not understand this. Okay? Big bath is nothing but you are going on a beach. Fine. Kids are going on the beach. They will swim. Is it right? They will swim left, right, center. Not once, twice, 1 hour, 2 hours, 3 hours. Totally exhausted. Is it right? Big bath is also the same thing for accounting. Is it right? It's the exceptional item. Is it? We are going to say that yes, this is the loss. 25,000 is a loss. Will not show loss one time. Is it right? Will not show 10 losses. Got my point? Will not show losses in 10 different places. Will show loss at one place. Is it right? We will show loss at one place. That is the big part. This is the one of the questions that has been asked in section A. Okay, section A. In the last examination, they have asked this question. Inadequate disclosure means that in some cases it is difficult to ascertain the provision. Definitely. See what happens when you are talking about the things is that provisions is based on assumptions. That is the difficult part. That's what it says. It is very difficult to ascertain because everyone will have their own assumptions. Is it right? Everyone will have their own assumptions of the provision and movements in the year as such. Is that? This is the problem with respect to provisions. The moment I say this is my assumption, you are not agreeing, you make your own provision. And nobody will make less provisions. People will make more provisions because they want to estimate profits as less and they want to show actual profits as more. What is the provision? Is that I don't want to spend that much time. Okay, you can read, you can do it on your own. Okay, fine. I don't want to waste that much time here. The provision is, you are talking about the 1, 2, 3 contingent liabilities, provisions and contingent assets. Is that? We are talking in terms of what? We are talking in terms of a appropriate criteria of measuring basis. Is it? Measuring the amounts. Is it right? Measuring the amount. Sufficient information is disclosed in the notes on accounts. Okay. I thought of not keeping this. Then I said that no, at least it will help you in reading. Okay. You have to read that. Is that? What is the objective is? To enable the users to understand what is the nature, timing and amount. Is it right? How much we are going to have the losses. Is it right? What is the nature means on receivables? What is the losses for non-recovery? Okay. What is a provision? A provision is a liability. Fine. Uncertain timing or amount. We don't know what is the timing and what is the amount. Is that a liability is present obligation? Fine. That is the definition of liability. Okay. I'm not using that much. Okay. What they say, a provision shall be recognized. Is it right? A provision should be recognized as a present obligation, a legal or constructive. Legal by law, constructive by agreement, by agreement. Now, when we say constructive, you have warranty. Okay, you have warranty. Warranty is the constructive provision. Got my point? Warranty is the constructive provision. Means you are going to say that yes, if something happens to the asset, we are here to replace the asset for the next 6 years, 5 years. You are taking the iPhone, you are buying a smartphone, they will give 1 year warranty. Then what you will do? You will extend to another extended warranty. Is it right? For that we have to make some estimates. Is it? It is the probability what? It is the probability of outflow of resources. Is it right? When you are talking about the warranty, warranty is not an inflow, it is an outflow of resources. A obligation needs, what is the present obligation as a result? It is the obligation of the present obligation of the past event. Is it right? You are selling the product. Is it right? You are selling the product, but what will happen? You have to think about the future. Is it right? You are having a credit sales. Is it right? You are having the credit sales. You are talking in terms of receivables. Is it right? You are talking in terms of receivables. Immediately what you will do? You will deduct the bad debts. Is it right? It is the obligation with respect to the past event as such, which have already occurred in the year end and give rise to potential outflow of economic resources. This is what the technical term. If you understand this much, that's more than enough for us. Is it? Don't waste time on this. I don't want to waste time on this. Is it? Legal and construct. This is where the company establishes a valid expectation on the course of past practice, regardless whether there is a legal or they perform the task or not. Constructive means we have a very clear instruction that yes, we will not go back. Is it right? We will not go back. Whatever we are giving an assurance, on this assurance we will go forward. Means we will execute that assurance. Is it right? What are the things? A retail store has a policy of refunding purchases by dissatisfied customers. Even though it is no legal obligation to do so, it is a policy of making refunds is generally known. Should the provision be made? Assume that what is a retailer doing? There is some conditions. Is that sometimes what will happen? There will be a sale. Is it right? There will be a sale. There will be a refund or there will be a exchange. Okay, there will be a refund or there will be exchange. Exchange means we will exchange with the same amount. Is it right? Same amount. Is that you are doing? Sometimes what will happen? They will repay. But nowadays what happening? Nowadays we don't have any repayment. Only we are having exchange. Is it right? That also exchange, what they say, there is a condition therefore within the next 7 days. Is it right? 7 days or 15 days as such. Is it right? Within 7 days or 15 days you can exchange. But beyond that you cannot do. Is it? Should the provision be made at the year end? The policy is well known and creates a valid expectations. You are telling to everyone, is it right? You are not telling to one person, is it? You are telling to everyone. The condition says that it should apply to all. Okay? It should apply to all as such. That is what the policy is well known. There is a constructive obligation. They are giving you an assurance. There is right. They are giving you assurance that a retail store has a policy. When you are talking in terms of a policy, it means it is a constructive obligation. It is probably some refunds may be made. This is not all refunds, but this is small probability is there. This can be measured using expected values. Is it? In that case, if you take all these conditions into consideration, is it? If you take all these consideration, then what we have can come to a conclusion that we can come to a conclusion that a provision is required. Yeah. Now, I told you at one point of time, it says that what? See, when you are talking about the sales, is it right? When you are talking about the sales. See, actually, is it the provision percentage, is it right? The provision percentage increases. What will happen? The losses will also increases. What happened? The credibility, is it right? The credibility or the credit ratings. The credibility or the credit ratings will decrease, and subsequently what will happen? The market value will also decreases. What it says that the provision, there will be a provision, there is no doubt on that. Is it right? There will be a provision. But what is that? The percentage of provision should be, as minimum as possible. Is it? The percentage of provision should be as minimum. That's why provision should be recognized as the best estimate. If the provision relates to one event, such as potential liabilities, from what happened, you have legal cases. Is it right? Some companies will have legal cases. In that legal cases, if they will keep some, they have to pay. Is it right? Some people, the probability is that if they are going to pay, is it right? If you don't make provisions, what will happen? Is it? Assume you have not made provision. Is it right? I will put an example here. Is it right? Is it? With provision. Is it right? With provision and without provision. Is it? With provision and without provision as such. In that case, what will happen? How the things will work? Is it right? With provision, assume you have receivables. Is it right? You have receivables. Your receivables are how much? 20,000. With provision, what will happen? You are saying that provision is how much? 5%. If you are taking 5% provision, 1,000. Is it right? Now, is it without provision? How much is there? You are talking about receivables. Is it right? Receivables is how much? 20,000. No provision. Is it right? What will happen? It can be. Now, the problem will arise here. Is it right? When you are receiving the cash, is it right? How much you are receiving the cash? 90,000. How much you are receiving? 19,000. Now, what happens? Here, we are expecting how much? We are expecting how much? We are expecting 20,000. But actually, how much we will receive? We will receive 19,000. I told you, estimate less, actuals will be more. Here what happening? Your estimation expecting is more than actual is less. These type of situations is not healthy for the business. Is it? If the provision is made on numerous events, such a provision to make repairs on goods within a year of sale, then the provision should be measured using expected values. You cannot make provision on all. It also, if you are making provision on each and every item, it means that what happens? It means that it is the inefficiency of the finance department of the firm, as simple as that. Is it? Because management is responsible for that. Is it right? That is why we are talking about. Now, what it says, a entity sell goods with a warranty covering customers for the repairs of any defects that are discovered within the first 2 months after purchase. Is it right? Means they are covering the cost of any defects discovered within the first 2 months after the purchase. Past experience suggests that 88% of the goods sold have no defects. Only how much is the defects will be there? Defective items will be how much? Defective items will be only 12%. Is it right? 100 minus 88. Is it right? It comes to how much? It comes to 12. 7%, is it right? 7% will have minor. Okay, minor problems. Is it right? And 5%, is it right? 5% will have a major problem. If minor defects are discussed and detected in all the products sold, the cost of repairs will be how much? 24,000. If major defects, what is the cost of repairs? Cost of minor repairs is how much? Cost of minor repairs is 24,000. Fine. And the cost of major repair, major defects is how much? Major defects is how much? It is going to be 200,000. What is the provision we have to make? Simple, is it a calculation? Is it a 1 minute? Is it solution? Is it a calculation of provision? Calculation of, is it minor defects? Is it right? Minor defects. How much is the minor defects? 7%. Is it right? How much is the amount? 24,000. It comes to how much? 7, 240, 240, 240. How much it will come? 24,000. 1,680. Okay, it comes to how much? 1,680. Major defects, is it? Major defects are how much? Major defects are 5%. It comes to how much? 200,000. Is it 1,000? How much you'll get? 200,000 into 5%. 10,000. Is it right? 10,000. Where are your Rizwan? Not seen. 11680. Is it right? This is nothing but the amount of provision. Are you clear? Fine. An entity has to rectify a serious fault in the item of plant that is constructed for a customer. The individual most likely outcome is that repair will be succeed at the first attempt at cost of 400,000. But there is a chance that the further attempt will be necessary, increase than the total cost of 500,000. Is it right? Now, what is the amount? What is the amount of provision you have to make? Is it first estimation is how much? The first estimation is how much? First attempt. Is it right? What is the how much is the amount? What they say? They say that it is going to be a best estimate. Is it? The rule says that it is going to be a best estimate and more likely. Is it? It is more likely. They say that the repair will succeed. Okay, they are making they will succeed in the first attempt. It is the best estimate. Is it right? How much you have to make provision? See, if nothing will happen, then they say that another attempt will be necessary, increasing the total cost from 400 to 500. Okay. Now, what they say, the most probably, this is words we are using, is it right? They say that most probably, how much amount is required? The amount is required. Is it right? The amount is required is how much? 400,000. So the provision amount should be, is it? So the provision amount should be how much? The provision amount should be 400,000. Fine. This is the way we have to work it. Next. What is the contingent asset? We have done with respect to the provision. Is it right? What is the contingent asset? An obligation that arises. Is it right? The past you have done because of past events. Is it right? Obligation whose existence is confined only if it happens. Is it occurrence or non-occurrence? It's nothing but the concept of what happened, the concept of probability, may or may not be of certain future events. Is it right? This is what we are doing. Is it a present obligation from past event, but it's not recognized? It will not recognize because what? It is not probable that the outflow of resources of embedding outflow of economic benefits which will be required to say it is not probable. There is no guarantee as such. Is it right? There is no guarantee as such that. But what happens? We want to create. We want to make sure that it is going to be the best estimate. See, the accountants, the finance managers take the advantage of this. Is it? Take the advantage of this. Fine. Tomorrow in future after audited accounts you are having good web numbers. Nobody will ask you. Okay. That's the way. It is not probable. This literally, if you ask me, it will not be that much movement of cash. With respect to what? With respect to IAS 37 as such. Is it right? Provisions, liability, contingent liability. Contingent by name itself that it may or it may not be happening. Is it? The amount of obligation cannot be measured. It may see what happens. It is a legal case. Is it right? Assume it is a legal case. What happens? We will not know. We don't know amount. We don't know the amount till the judgment will come. Is it right? Till the judgment will come. We don't know. That's the issue as such. Is it right? The moment we don't know when the event will be settled. Okay, when this legal suit can be settled. It will take years, it will take sometimes months. Is that right? That is the concept of contingent liability. What is the contingent asset? The asset arises from, again the same. Is it right? This is the liability, this is the asset. Past events. Is it occurrence of non-occurrence of more uncertain future events? See, what is the contingent asset? See, one side we are talking in terms of contingent liability. Fine? Definitely. In the same way, we are talking in terms of contingent asset. See, I got impacted on something. Is that I will file the case. Then what will happen for myself, for the company as such? Is it it is a contingent asset. Tomorrow there is a probability that you will get money. That's probability. No complete assurance. Is it right? There is a probability that you will get things as such. Yeah, degree of probability. What is the accounting degree? See, what virtually certain. Is it virtually certain means you have to take into consideration the in terms of outflow, make it a liability. In terms of inflow, make it a asset. Probable. Maybe you will say that yes, it may or it may not happen. Is that? Then you have to create a provision. You have to disclose that what is the current assets. You have to disclose. Where you are disclosing? You have to disclose in the notes to the accounts. Is it possible? Is it possible? If there is a possible means maybe. Is it right? Probable means conditionally. Possible means you disclose it as a current liability. Possible means you ignore it. The inflow is, unless until cash is in your hands, you are not going to say it is a cash. Very simple. Is it right? And in terms of remote extreme case, is it right? They say that in case of extreme stage, both in terms of cash inflow and outflow, we have to ignore it. Is that? These are the things. When you are creating a provision, is it right? When you are creating a provision, what you will do? You will provision is a liability. Okay? Provision is a liability. And always the liability will be on credit side. Is it whenever you are creating a provision is a debit or is it it's a liability? Is it you are creating the liability? If you credit it, it will increase. Is it when you are talking about in order to increase further? Is it right? First, what you have done? You have is it first what you have done? You have created. Is it you have created. Now what you are doing? You are going to increase it. If you are increasing it, the same answer, same debit and credit. Is it right? If you decrease, it is the reversal. It is the reverse. Warranty provisions is often given in manufacturing. See, warranty as simple as the smartphones, cars. Is it right? You are talking about the cars. It is warranty. Is it right? You are talking about the smartphones. It is the warranty. You are talking about the laptops. It is the warranty. Now, see, if you are selling 100 laptops, is it right? Assume you are selling, I am taking an example, is that 100 laptops. 100 laptops will not have the same problem. In 100 laptops, what you are making a provision, is it right? 100 laptops into, if you take into consideration the sale value, is it right? If you take into consideration the sale value of how much? 200. It comes to how much? 1201. Okay? 20,000. 1, 2, 3, 4. 1, 2, 3, 4. Okay? It comes to how much? 20,000. Right? No, not 20,000. How much you will get? How much you'll get? Where are you people? Where are you? I am searching people. Is it right? I am searching you. Fine. Now, see, this is what. Now, what happens? You are selling 100 laptops. Each laptop is 200. How much you are getting? Now, out of these 200 laptops, maybe one or two laptops will get some technical thing. What you will do? You will say that I am creating a provision of how much? I am creating a provision of 2%. Is that I'm creating a provision of 2%. If you create a provision of 2%, how much you will get? We are keeping aside 400 reals, expecting probable that there will be some claims. Okay, there will be some claims. That's what it says. A warranty is a given in manufacturing and retailing business. Fine, that's very good. There is either a legal or constructive obligation to make good or replace a faulty products. What is there? Is it right? What is a warranty provision? Warranty provision is nothing but, is it right? It's required at the time of sale rather than the time of repair. Is it right? Warranty provision is you will tell in advance. Is that when you are selling the product? See, you are buying so many things. Is it right? Assume you are talking about buying a smartphone. You are buying a watch. Is it right? You are buying a watch. When you say that you are buying a watch, what they will do? They will give a warranty card as such. Is it right? They will give you a warranty card. That is making a sale in the past event, which will going to give some obligation in future. Is it? Most importantly, environmental provision. See, environmental is the hot topic which is currently on everybody's mind. Is it right? We are talking in terms of countries, we are talking in terms of companies, we are talking in terms of consumers. Is that? We are talking in terms of countries, we are talking in terms of consumers, we are talking in terms of the what I say? Country, consumers, and company. Is it? In all the cases, it has to be there. Is that people will create environmental provision. Understand point? Your first time you are going to learn this. Is it? There will be a what? There will be a provision with respect to what? Environment. A provision will be made for future environmental cost if they are either same thing, legal or constructive. What happens now when we do the things? Again, what we are doing, we are taking into consideration what? Present values. See, as simple as that. Now I will be little more specific on that. What is the present values? Is that present value is nothing but value of money. Is it value of money? It is nothing but time value of money. Is right? It is nothing but the time value of money. That is what we are talking about. Means what happens? Assume how it will work. Is it right? You are creating a provision for 3 years. Is it right? You will assess what is the time value of money, what is the risk, is it right? Based on the risk, you will say that yes, the value of the risk in this type of businesses is 8%. Then this is going to be called as cost of capital within brackets R. Is it within brackets? Now what happens? See, as the rule says, the value of money will decrease. Okay, the value of money will decrease. Is it because of so many factors? Purchasing power, interest rates. Is it right? Purchasing power, interest rates, flow, inflation. Is it right? So many things that matters to us. Is it? That is the reason we should know. They say that it is for the year 1, it is for the year 2, it is for the year 3. The year 3 value will not be 10, is it at 10,000? Definitely the value will decrease. Then what we are doing, see again I am saying we are calculating present. What is present value? C divided by C to the power of time, is it at 1 plus R to the power of, is it? These things we have covered something in the cash flow statement, in the where we have done this. In one of the examples we have done present value lease payments. Yes, is that we have done in where we have done in lease payments. Yeah, in the examination section B, okay, in the examination section B, they will give something like this. What it says, what they are asking. First, you focus on the question. This is what I say all the time. Sometimes even I will miss. Okay, 1 minute. I will have a glass of water. Rosely is a company that carries out many different activities. It is proud of reputation as a caring organization and has adopted various ethical policies towards its employees and wider community as in which it will operate. Okay. As part of this annual financial statement, the company publishes details of the policies, which include setting up targets in activities. See, this is what environmental accounting talks about: recycling, controlling emissions of noxious substances, and limiting use of non-renewable resources. Battery is renewable. Is it right? Battery is renewable, whereas electricity, whereas petrol, whereas diesel is non-renewable sources of energy. Isn't it? This see in the exam. See, instantly you will come across in the paragraph. Then we don't have dictionary. Is it right? We cannot access dictionary. Then you say that what is our non-renewable sources? Means in terms of what? Not renewable. Once it is used, it is used. Power, you use it, it will not come back. Electricity. Petrol, you use it, it will not come back. Okay. The company has an overseas operation that is involved in mining precious metals. These activities cause significant damage to environment, including deforestation. Is it right? The company incurred how much? Capital cost of how much? 100,000. Is it right? And is expected that the mine will be abandoned in 8 years' time. Means after 8 years we will not have anything. The mine is situated in a country where there is no environmental legislations. Companies to rectify environmental damage. See, as simple as that. What happens whenever you are talking in terms of mining? Okay, mining is nothing but extracting gold, extracting oil. Is it right? Extracting stones. Is it right? Limestones. Is it right? Mining is in terms of sand. Is it right? In terms of sand. All these things. It is related to what? Very simply, it is related to the environment. Is it right? You are talking about you are talking in terms of getting the steel. Steel gets from where? Steel, iron will get from where? Iron get from the iron ore. Is it right? Again, you will have the the raw materials will be there. You process it and you will get the finished product as such. Okay, that is what it says for 8 years. The mine is situated in the country where there is no environmental legislation to rectify environmental, and it is very likely that such obligations will be enacted. Means there is a possibility that there is a law will come in the next 8 years. It has been estimated that the cost of cleaning the site and planting the trees is how much? 25 million. It will probably be necessary to make further attempt, which will increase the cost by how much? It will means for cleaning purpose, all those things, the cost will increase to 5 million. What is the company cost of capital? Company cost of capital is 10%. Fine, just one minute. 30,000 into 1 divided by 1.1 to the power of 6. 30,000 divided by 1 divided by 1.1 to the power of 8. Thirty thousands into 1.160, 1.1 31 divided by 1 divided by 1.1 to the power of 8 into 30,000. Fine. Okay, fine. Now what happens? What they are saying, is it right? What they are saying is that discuss whether the provision for, see again I will read, okay, I will read and I will put the things, is it right? Rosalie is a company that carries out many different activities. It is proud of to a reputation of caring and adopted various ethical policies towards employment and the wider community in which it operates. Fine. As part of the annual financial statements, the company publishes details of environment policies. Okay, fine. Now, how much they have incurred capital cost? Is it right? How much they have incurred capital cost? The capital cost is how much? The capital cost is 100. Is it right? 100 million. Is it right? And what is the expected that the life is how much? The life is going to be 8 years. Is it 8 years? The mine is situated in a country where there is no environmental legislation obliging companies to rectify environmental damage, and it is very unlikely that such obligation will be enacted for how many years? Next 8 years. Next 8 years. It is estimated. Has been that the cost of cleaning is how much? Cost of cleaning. Is it right? Cost of cleaning is how much? Cost of cleaning and replanting is going to be 25 million. And if the replanting was successful at the first attempt, but it probably be necessary to make further attempt, it will increase to how much? It will increase to 5 million. The company cost of capital is how much? Cost of capital is how much? Cost of capital is 10%. Is it right? Fine. Now, what they are asking us, discuss whether a provision for the cost of cleaning the site should be made and prepare extracts of the financial statements. Is it right? Extracts of the financial statements. Fine. Now, what we are going to do, if you are talking about extract of financial statements, is it right? Extract of financial statements. What you will do, you will come across which points you will come across. They have how much they have taken into consideration? 100 million. Is it right? 100 million. See, what are the things we are talking in terms of non-current assets? We are talking in terms of depreciation, in terms of next 8 years. Is it right? Means we will come across what? We will come across current liability and we will come across non-current liability. Fine. Now, what they say that cost of cleaning is how much? 25 million. Okay, cost of cleaning is 25 million, and if replanting was successful at the first attempt, but it will probably be necessary to make a further, probably most best estimate. Okay, this is it. You have to catch the words. Is it right? Probably to be necessary to make further attempt means it is nothing but it is a best estimate. Means how much will be the cost of cleaning? Cost of cleaning, is it right, will be how much? 25 plus 5, it comes to 30. It comes to 30. Okay, just you understand this question, all the summary is there, and very sensitive, very interesting, and very important also. Is it right? Is that they are talking about the environmental question? One question will be there. Is it right? When without environmental question, don't expect anything. Is it right? Now, what we have to do, we put like this: step 1. Is it right, sir? How much you have to capitalize? See, as per, is it right? As per IAS 16, is it right? 100 million, is that capital cost? Is it 100 million is capitalized? Is that 100 million is capitalized? Okay, fine. Now, that's very clear. Is it right? Now, we have to build up the case. Is it right? We have to build up the case. Why we have to work it out like that? Is it right? Why we have to work it out like that? Now, how much is there? How much is the amount of? It is estimated that the cost of cleaning the site and replanting the will be 24. Fine. 1 minute. The mine is expected. The mine is situated in a country where there is no environmental legislation obligation companies to rectify environment damage, and it is very unlikely that such legislations will be enacted within the next 8 years. It has been estimated that the cost of cleaning the site and replanting the trees will be 25 million if the replanting was successful at the first attempt. but it will probably be necessary to make further attempt, which will increase the cost by how much? 5 million. Is it right? Now, the company cost of capital is how much? 10. Means what they are saying, they are talking in terms of what? They are talking in terms of the cost of cleaning. Is it right? Now, we have to calculate depreciation also. Is it right? That's what it says. Where we have written all those things, we have written here. Is it right? We have written in the beginning. You have to calculate depreciation, you have to calculate the non-current assets, current liabilities, you have to calculate what? You have to calculate the the non-current liabilities, and most importantly, we have to take into consideration the finance cost also. Is it right? For this, the most important thing, how much is the amount we have to allocate? Is it right? How much we should be allocated? We are paying how much? 30,000 we have to keep it. Is it right? For replanting and successful. Is it right? For what we have to we have to make a provision for how much? We have to make a provision for 30,000. Is it right? Which has to be done at the end of what? At the end of 8th year. Is it right? Step 2. Is it? We have to see, we have to make a, see, this is why we call it as what? We call it as a provision. Are. Okay. Now see what's happening. 30 million. Is it right? Now calculate present value of provision. Is it present value of provision? How much is there? How much we are giving? 30,000. Is it right? See, what is the formula for that? C to the power of T divided by 1 plus R to the power of T. Okay? Fine? Now, $30,000 divided by 1.1. 30,000 divided by 1.1 to the power of 8. Is it right? 1.1 to the power of 8. How much you will get? You will get some, how much? You will get some, 1 minute. 13,995. Is it right? Present value of provision. Is it right? Present value of provision. Fine. First we have to calculate the present value of provision. Fine. Next, what we have to calculate? We have to calculate, is right, present value of provision. How much is the, on this basis? Is it right? On this present value of provision. Provision is what? Provision is a liability. Is it right? Provision is a liability. Is right? Provision is a liability. What will happen? Definitely we have to credit it. Is it right? To increase the liabilities. 1 minute. Okay? To increase the liability. Fine. Next, what happens is that depreciation. Fine. Depreciation also we have to make sure. Is it right? Depreciation. Step 3. Is that step 3? depreciation. Is it value of depreciation? Is it value of non-current asset? You have the capital cost. Is it right? You have the capital cost. Capital cost plus this also amount you have to add. Is it right? How much you have to add? You have to add how much? See, provision is how much? 13,995. Is it right? 13,995. See what happens? Total cost divided by life. Is it right? What is the depreciation? Cost minus scrap divided by life. Okay? Cost minus scrap. What is the cost? You have the capital cost. You have the provision cost. Is it right? Provision cost is how much? 13,995. Is it right? 1390. Capital cost is how much? 100 million. Is that capital cost is how much? 100 million. And this is also million. Okay? 100 million plus 13 comma. Okay? Divided by how much? 8. It comes to how much? 113,995 divided by 8. It comes to, understanding this or not? First tell me. See, first what we have done, how much we have to capitalize. How much we have to capitalize. How much amount we have to capitalize? 100 million. Fine. Step 1. Step 2, we have to know what is the present value of the provision. Is it right? Present value of the provision. How much is the present value of the provision for planting the trees and for replanting the trees extension? 25 plus 10, 25 plus 5, 30,000. It is at the end of, it is for how many years? 8 years. We have calculated the present value, 13,995. Next, step 3, what you have to do? We have to calculate the depreciation. Is it right? What is the cost? Cost minus scrap. We don't have any scrap. Cost is there. How much is the cost of the asset? Is 100,000 million plus what is the present value of provisions is 13,995 divided by 8. It comes to how much? It comes to 14,249. Is it right? It comes to how much? 14,249. Is it right? Step 4. Slowly and steadily I am doing. Is it right? I am right. Step 4. Once you have done these steps now, other things are piece of cake. Okay? Other things are piece of cake. Step 4. What you have to do? You have to calculate the finance cost, present value of provision. Is it right? Definitely they have the cost of company's cost of capital is how much? 10%. Is it right? When they are making the provision, definitely for that provision they have to pay the finance cost. Is that finance cost on the amount of provision. Is it right? How much is the 13,995 times 0.10? It comes to how much? 13. I can put it as 1400 approximately. Is it right? Approximately. Now, you can do it directly or you can do it through the journal entries also. Fine. You can do it in both the ways. Is it right? Either you can do it directly or you can do it through the things. Fine. If you take, I'm just doing directly, then I will support with journal entries. Okay. I will support with journal entries. Step 5. Is it right? Step 5. Income. So what we are talking about? Income statement. Now, in the income statement, what are the things we will show? We will show depreciation. It is an extract, okay? It is an extract. How much we have calculated depreciation? 14,249. Is that? You have the finance cost, is it right? How much is the finance cost? 1,400. That's all. Is it? Put 2 dash. Fine. Next, statement of financial position. Is it? Statement of financial. How much is the non-current assets you are having? Is it? We have called what is the how much you have calculated non-current. This is what non-current assets. Is it right? This is the value of non-current assets. How much is the non-current assets? Non-current assets is 113,995. In that we have calculated depreciation also. Is it right? How much we have calculated depreciation? We calculate depreciation of 4,249. How much you will get? 113,995. 113,995 minus 14,249. How much? 99746. 99746. Is it? 99746. Now is it that this is happens? Is it? Next, non-current liability. Is it? What is the provision we have made? Non-current liability. Is it right? Non-current liability. Non-current liability. We don't have non-current liabilities. Is it right? We have provision. Is it right? How much is the provision we are having? Is it right? Provision. Provision for finance cost, provision for the present value. Is it? Provision. One provision is what? One provision is environmental provision. Is it right? Environmental. That's what they say. Environmental. Is it right? How much is the environmental position? It is 13,995. Is it right? 13,995. This is it right? 13,995. Okay. Next, you have this is current liabilities. You have finance. Don't put minus. Okay. This is the finance cost payable. Is it right? Finance cost payable. How much? Finance cost payable is 1,400. Is it right? It comes to how much? 5,933,151. Slowly revise it. Any doubt, just ask me. Is that step 1, step 2, step 3, step 4 and step 5. Keep it this one, okay? Remember this. See, first time it will take time, okay? Very simple, I'm not saying that. First time it will take time. Once it's done, definitely again we come to a practice questions. Then again I will revise the same thing. Is it right? I will come back to the lecture. I will show you how we have done. And subsequently we will going to work out. Because if you take section B, is it right? In section B, if they are giving a question on this, it means what? They will test two theory questions and they will test 3 calculation questions. Is it right? So what we have to do? What is the amount? They will not give the same question. You don't expect ACCA. Don't expect that we will get the same question as such. Is it right? But Conceptually, they will focus on this area. What happens? Can I go to the next one? Ask me doubts, okay? That's very important. Ask me doubts. I can understand. If you ask me now, I will tell you where you need more understanding. Okay? Where you need more understanding, I can tell you. I am not seeing you people, but I can tell you. Is it right? You have to be very clear here in two areas. Okay? You have to be very clear in two areas. I will tell you before you ask me. Is it right? Before you ask what happened. Is it? Before you ask me, I will tell you where you need. You have to be extra cautious here. And you have to be extra cautious where? We have to be extra cautious where? This is okay. 13, we will carry forward this thing only. We have to be extra cautious here. Is it right? You have why we have to take present value of provision. You should ask me questions. That's very important. Literally, why we have present value of provision. We are taking up this task. When we are taking up this task, we are taking this task. This is the cost of cleaning the site and replanting the trees will be. When you will do cost of cleaning and replanting, we will do cost of cleaning and replanting after 8 years. Is it right? After 8 years. For that, after 8 years, we should know the present value now. Got my point? We have to discount it in the beginning. We are creating provision. We are creating what? We are creating provision for that 30,000. Now, when you are taking we say that we have to create provision. How much is the cost of capital? Finance cost. Is it right? Finance cost. That is the reason we have taken into step 2. Step 3 we have talked about depreciation. The fourth one is we are talking about the finance cost. See, any amount you are taking, they have not said that we are investing. If they have not said they are investing, means there is some cost related to that. Nothing comes free of cost. When it is cost related to that, on that amount of 13,995, we are calculating. We think that we are borrowing that money. Once we are borrowing that money, we have to pay 10% rate of interest. That is the reason we have to show it separately, the finance cost, and separately we have to show the things. Now here, what happens? What is the value of the asset? Is it right? Value of the asset is nothing but, see, after 8 years you have to pay you have to do the cleaning cost. Is it right? Definitely, whatever the additional cost you are going to incur, that additional cost should be added back to the asset value in order to calculate the depreciation. This is not the rule here. This is the rule everywhere. A common general rule as such. Is right? Step 1, 2, 3, 4. You just focus on this. Anything is there, you just come back to me. What it says, That's the provision, is that on 14th June, a decision was made by the board of entity to close down a division. The decision was not communicated at that point to any of those. They have not come. The rule is you have to communicate. Is it? The rule says that IAS 37 you have to communicate. At that time, as those affected have no other steps and taken to implement decision for the year 20. If they have not communicated, definitely there is no provision. See, the agreement, when it will come, when there is a response from others, fine. When there is no response from others, definitely the concept of provision will never arise. Is it? They say that at that time of those affected, no steps were taken to implement that decision by the year end. No other steps were taken. Is it right? The division was closed. See the thing. The division was closed on. The division has been closed in 2005. Sorry. Is it right? Should the provision should be made? If there is no constructive obligation, no communication, there is no constructive obligation. Is it? What happened? The decision was made by whom? The decision made by the board of the entity. Board has taken the decision. Board has the option to make sure that board have the option to reverse their decision. And when you are doing this, if they have not mentioned what is the percentage of provision, is it right? They have not mentioned anything percent. They have not mentioned anything cost, all those things. Is it right? Is it? What we have tried, there is no provision can be made because what? No inputs, no materialistic values. Is it right? That is the reason we have to take this into consideration. When the provision will come, when there is a communication. Is that when the provision will come? When there is no provision communication, definitely we are not communicating. Is it right? When you are not communicating, is it? You have the option. Still, it is not valid. Is it right? You have the option to reverse it. Is it right? We cannot make any provision as such. Is that these are the basic nitty-gritty of the things as such. Is that restructuring provision? How we can change the provision? Is it right? We can change the provision. A restructuring is a program that is planned and controlled by management and materially changes the scope of business. Is it right? The scope of business or the manner in which business is conducted. See, you can restructure the provisions. Is it right? You have done year 1. Is it? You have done year 2. Now what happens? You are in year 3. You can as per the things, you can revise the provisions. A provision made only if a detailed, formal and approved plan exists. Understand? When the provision you are making, a detailed formal, a plan has been announced to those affected, then only you have to make a provision. A provision should include expenditure and it should be associated with what? It should be associated with the cost. This will be there in section A. Is it? This will be there in section A as such. Is it? How we have to restructure that. They are talking about the same thing. Is that a common example of contingencies? What is the contingencies? It may or it may not arrive. Is it right? If A sues B legally, is it right? Legal cases. Just understand it, okay? That's the basic thing. If A assumes B it believes that it incur losses or the B faulty procedure, then B will be liable for damages. Whether or not the damages will actually be paid depends on the outcome. Until the outcome is case is known, is it right? Until the outcome case is known, we cannot do anything. B has a contingent liability and A has a contingent. Contingent means may or may not be. It is still in the court, is it right? Still it is in the court. It is not been decided. We don't know whether it will be in our favor or it will go against the favor. Till that point it is not decided. It is feasible to have a to identify it as a contingent liability in our books, and in the books of other party it should be a contingent asset. The same thing happens, is it right? With what is the concept during the year? Is it right? During the year 31st March, a customer commences legal proceedings. All this comes under legal factors. All those things, is it right? Against the company, claiming that one of the food products is manufactured. Several members of his family members ill. The company lawyers have advised that this action will probably not succeed. Should the company disclose this in the financial statement? They said very clearly, is it right? It may not succeed. This is nothing but the best estimate. Legal advice says that it is unlikely to succeed. Is it right? If it is unlikely that the company has a present obligation. Is it right? Therefore, no provision should be recognized. See, you got the answer in this one. Okay, you don't need to go further as such. Is it right? You don't need to go further. They say that it is unlikely to succeed. When the unlikely is to succeed, no provision should be recognized. Fine, you can put it as a contingent liability. There is no doubt on that. But is it right? But till the court is not settling the case, it will be there in the financial statement. Unless the possibility of transfer of economic benefits is means what is the best concept provision? That there should be a transfer. Is it right? Where economic benefits where I have unless the possibility of transfer of economic benefits is remote, the financial statement should disclose brief description of nature of accounting and estimate financial effect and an indication of uncertainty along the relating to the amount or timing or see for what they say. Come back to this, is that what they are saying? They say that they have started the customer has started legal proceedings and caused several members to have become ill, and it will not succeed. This is very important, is it right? This is very, very important. Probability succeed, probability not succeed. Is it right? That is the only thing. Probability succeed, make provision. Probability not succeed, don't make provision. Is that? That's the simple thing. Means you should not, if legal advice is it is unlikely to succeed, no provision should be recognized, and this is however a contingent liability, and possibility of transfer of economic benefits is remote. Definitely, if it is not going to be successful, in what sense we can create a provision for that type of transactions? Is it right? Now, this is the second part. Okay. The first part is 37. The second part is this. Just I will have a small review on this and we will stop. Okay. What is the IAS events after the reporting period? Events after the reporting period are those events, they are favorable and unfavorable. Then they say favorable or unfavorable, the financial statements. Now I am not talking about any particular, is it right? Not statements, is it amounts? Is it right? Amount may increase or may decrease. It may be revised. It may be favorable or it may be unfavorable, which occur between the reporting date and date on which the financial statements are approved. Is that, see the thing? This is where happen. We are talking in terms of 31st December. Is it right? There is a timeline. If you are going to study auditing, in auditing it is there. Is it right? 31st December. What will happen? There will be have an audited financial statements. Is it right? Then what they will do? They will issue it. Is it right? Then they will do? They will approve it. There is a scope, is it right? There is a scope. Most likely, this will start with 31st December and this will end on when? 30th of April. Till that time, there is a condition whether we can adjust it or we cannot adjust it. Is it? There is a condition as such. What are the adjusting events? Adjusting events are the reporting date that provide additional evidence or conditions. It's not so easy that you are going to adjust the events, is it right? Irrecoverable debts, bad loans, is it right? If you are talking about losses, is it loan losses, which may help quantify the allowance for receivables at a reporting date, is it right? Means what will happen? Definitely they will wipe out the receivables. Is it right? Receivables is always on the hit list. Very simple. Sale of inventory below cost, providing evidence of net realizable value. What we are going to do? We are going to say that whenever we are talking in terms of inventory, is it right? IAS 2. You have to mention this. But I'm telling you for both of you. Is it right? And we have to say whether it is the lower cost. Is it right? Whether it is a lower cost or it is a net realizable value. Sometimes what will happen? There will be claims from whom? Claims from the insurance. Is it right? Claims from the insurance. See, you have filed a case. Is it right? Or you are talking in terms of some damage has been happened to the from the goods, is it right, in transportation. In that case, what will happen? You can claim it. When you are claiming it, immediately it will not happen, is it right? You are putting the claim, request will go, approve will go, stage by stage. Now there is a system that you can check online at which window it has been given, is it right? In that case, is it right, what we are doing? We have the option to make sure that we can have a insurance claims. In terms of discovery of frauds or errors, is it right? You have to make the adjustments. Is it? You have to make the adjustment. Where we cannot make no adjustment items, is that where, see, these things will ask, is it right? These points are important. A major combination, business combination. Major combination, there is no financial transactions, is it right? A destruction of major production plant by fire after the reporting date. Next year it will come. Abnormally large changes in asset prices of foreign exchange rates after the reporting date. Before the reporting date it happens, adjustment. After the reporting date, definitely we cannot do any adjustment. But we are not going to say we will stop. There is an alternative for that will be. Is that Anderson Limited? Is it Anderson Limited? We are talking in terms of 31st December. Following items are occurred. State whether it is an adjustment event or non-adjustment event. Is it in insolvency of a, see, what is the precondition? Is it if it is related to financial factor, it is an adjusting. If it is a non-financial factor, is it? It is a non-financial factor. Definitely, you have to think. Okay, it's not like the straight away. Insolvency of a customer, is it right? Insolvency of a customer as such, is it right? Whenever it is a financial item, it is adjusting. Loss of inventory due to flood. See, are two parties are involved? No. Here two parties are involved. Is it right? Financial factors and two parties. Then there will be an, is it? Then we have to see loss of inventory due to flood. Is it right? It is not two parties. Is it right? It has been loss due to fire. Is it right? Loss due to fire. If that is the case, we cannot adjust it. Is it right? If that is the case, we have to show it in the current year. We should not show in the past year. Completion of completion of the purchase of another company. Definitely, we have to think in terms of year. What they are asking us, they are making as on 31st December, the following events occurred on January 2008. We have to do the things or not. Is that if the things can be carried forward, you should not do. If it is not carry forwarding, we have to be very particular. Is a completion of purchase of another company. Definitely, it will be in phases. Is it right? It will be phases. Now, what happens? Take into consideration till the final. Is it right? Till the final decision is taken, is it right? Is taken, nothing is going to happen. Completion of the purchase of another company, it is not, it is in the process, is it? It is a non-adjusting. See the things. What it says, evidence showing that the NRV is less than below cost. This is as per IAS 2. Is that? This is as per IAS 2, clearly defined. If it is clearly defined, then we have to make sure that it is as the adjusting item. A court case from August is settled by Anderson. Is that? Definitely. If the court case is this settled, you have to create a provision. Is it right? We have to make the adjustment as such. Is that? We have to make we are paying whatever the amount is going to be transferred. Is it right? The discovery of a fraud. Is that? Anything happens to fraud, understand this, you need to make an adjustment. Is that? Just I will complete this. This is the last one. Then I will close it off. Okay. Shortly after reporting date, a major credit customer of an entity went into liquidation of heavy losses and expected that little or none of 12,500 debt will be recoverable. 10,000 of the debt relates to the sales made prior to year end and 2,500 for the sales of the first 2 days of the financial year. Because of heavy losses, a customer went for a liquidation. He has a debt of 12,500 recoverable, 10,000 relate to the sales and 2,500 for 2 years related to another sales. In 2001, the financial statements, the whole debt has been written off. But one of the directors has pointed out that as a liquidation is an event, after the reporting date, the debt should not in fact be written off. What they say that in 2001, is it right? These very specific conditions are there, is it right? The financial statement, the whole debt has been written off. You cannot write off all the debt, is it right? But one of the directors pointed out that in the event of liquidation, if happens, that debt should not be in fact written. Why you have to write off the debt? Is it right? Unless there is you cannot write off. Bank has to write off. As simple as that. Is it right? What is the solution? IAS 10, is it right? These are conditions. Especially this one. Is it right? This one. Is it right? Yeah, the theory, the example. Fine. Understand how they have framed it? They framed it under 2 different parts. Under IAS 20, is it right? Under IAS 10, an event after the reporting date is an event which occurs between the financial period and date on which there is a approval. $10,000 of the received existed on the reporting date. Is it right? It is existed what? It is existed on the financial state. And the liquidation of the major customer provides more information about the receivables. Is it? What it says? It says very specific. Is it right? They are talking in terms of the sales. Is it right? They say that 10,000 of the debt relates to sales made prior to the year end. Is it right? Prior to the year end. Once you are saying it is related prior to the year end, is it right? What it says? They are giving the information about the receivables. Is it right? And most importantly, it is going to be done. It has been came to the notice after the reporting date. Is it right? Existed at the reporting or on the date of reporting it is there, but it came into picture after the reporting date. If anything is coming after the reporting date, we have to make sure that amount as on date of receiving, it is a receivables. It is a receivable. We have to see what is. It's not so easy, is it right? It is not so easy. When you are writing off any amount, you have to be 100% clear that again, is it 100% clear that how much you are going. Now 10,000, fine. 10,000 is the receivable. We cannot say that 10,000 out of 10,000 will go off, is it? This concept will say what? It is not a big bath. Got over? When we say it's a big bath, 10,000 of 10,000 will go off. That's not possible, is it right? They are expected that little or none of the little. See the thing. What they are expecting? They are expecting that there is a little or none. Still they have the hope, is that will be recoverable. Means what the major customer provides more information about the receivables. In accordance with the IAS 10, this is an adjustment event which will require the debt existing on reporting date to be written off in where? To be written off in 2001 financial statement. When the financial statements are happening, is it right? In the 2001 financial statement, the whole debt has been written off. You don't see the thing. Very simple. Once we cannot write off the debt, okay? If we want to write off the debt, we have to get the sufficient evidence on that. Is it right? We have to get the sufficient. And when we are talking in terms of, see the thing, when we are talking in terms of things, how much is there? It is 15,000. Is it right? It is 15,000. 15,000 is divided under what? 15,000 divided into 10,000. 15,000 is divided into first year is 2,500. Second year is how much? 2,500. Whenever you are writing off, is it right? You have to write off by creating the provisions. Is it right? By creating the provision. And you have to give a timeline. Usually the bank says that, the rule says in general that you can carry forward the bad debts for 4 years, and after that only you can write it off. What it says, in accordance to with IAS 10, this is an adjusting event. When it is an adjusting event, it can be adjusted in where? It can be written off in the year 2002 financial statements, but not in 2001 financial statements. Little bit technical one, okay? Little bit technical one. So basically, we will do it. Don't worry about that. The moment we will do the practice questions, they will have more clarity. Now, to what extent we can work it out? We say that if whether we should do the adjustments or we should not do the adjustments. When we have this option, immediately we should not do the adjustment. We have to give a timeline, and the rule says that maximum 4 years. Maximum 4 years we can carry forward the provisions, and later on, if it is not recoverable, we can wipe it out completely. We cannot spontaneously and instantly we can write it off. That is the concept of big bath. Yeah, a little. See, I'm telling you, very serious. Is it a little bit challenging? Is it right? Provisions are fine. Is it right? We don't have any doubt on provisions, contingent asset, contingent liabilities. Is it right? We don't have that much issue there. But coming to the IS, this one, is it right? It needs little bit thinking on that. The more we will work it out, inshallah, it will give some more idea on that. जकरिया मौलाना है एक बेटा सैटरडे बेटा जल्दी जफीरा जफी तो ठीक है ना मेरे चलने का है हाँ नहीं बोलो जी बोलो मेरे से नहीं होता बेटा हमें मैं नहीं बोला मेरे से नहीं होता पता नहीं मैं नहीं पढ़ा ना मालूम मेरे को वो थ्रेड नहीं मिल रहा चलते अरे चलो मेरे को आपसे मेरी खबर बोलने का नहीं फिर से